happy new week in general, I guess. So happy new month? No, that was last week, wasn't it? Good to be with you as always, and I'm very glad you could join us for Trading Buddies for this Monday, the 11th of April, 2022. First up, let's see what's happening in the wonderful world of the pound versus the US dollar and see if we've got anything that tweaks our interest in far as a breakout trade is concerned. Screen is about to appear, and there we go. So as you can see, Friday was for most part, a very, very poor day for the pound versus the US dollar as the dollar gained strength, perhaps on the back of what everyone now believes, well, what we're being fed, let's put it that way, is going to be an aggressive rate hike coming from, series of rate hikes coming from the Fed in the not too distant future. We shall see about that. We do have, in fact, two central banks this week, again, both of whom have indicated, well, the economists believe are going to raise interest rates. I think the Kiwi is first, and they are going to supposedly raise their interest rate by 0.25%. And then you've got the Bank of Canada, which is supposed to be, by the economists, that, hello, Paul P., that contribute to the Forex factory beasts, increase interest rate by 0.5%. Interesting that we're in a Kiwi CAD trade still after how long? I don't know. We'll have a look at that very shortly. So that's kind of happening later in the week, Wednesday and Thursday, if memory serves me. And I'm hoping that we can get take profit in that trade before we get to those news announcements. Could be an interesting ride. Okay, in terms of the pound versus the US dollar, I don't know how I got sidetracked then, but I continue to sidetrack myself very easily. 100 and let's say 104, add the spreads, you probably add 110 pips of risk if you wanted to trade this as a breakout. Problems. Well, let's have a look. Are there problems? You can see that if you got in at the low, you'd be trading pretty much in free space there for a bit. If you ignore the bottom of this range, of course, which is, yeah, almost 1-to-1, I suppose. It's kind of getting there. That's probably the level that's going to be of concern. And it's probably not 100, it's not even half that, about half that to that level. So that's probably a no for me. On the high side, what have we got? Should we enter at what, 129.90 something? So about there. Actually, that one looks a whole lot better to the upside. No, it doesn't. 44 pips. No. Again, it's a no from me. If I was to analyze this chart, I'm still of the opinion that we're going to bounce here at some stage off the backside of this monthly trend line, but it continues to go in a southerly direction, and the dollar is strengthening, like day by day by day. So it's pretty tough to be thinking long pound US dollar at the moment, I'd have to say. But the support level is there. That's the backside of that trend line that we're banging on, the bottom of the range, the descending channel. So does it really matter what the fundamentals are saying? Well, some people will say yes, some people will say no. I'll say the chart will tell us ultimately what the result is, but it is tough to be thinking long here, but that won't stop me if I see a setup. At the moment, I can't say that I do. I'd be looking on the weekly chart for the very first thing, a game changer bar, not there, or a reversal of some kind. Maybe you could call that a double bottom. I'm okay with that. Then you'd need a higher low on the back of that potential reversal. Well, there's the potential reversal in that double bottom. So I'd be looking for a rally, then a higher low before I'd even think about trading this long. But that's just me. So pound US dollar is a no. We do have 1, 2, 3, 4, 5, 6, 7, 8 game changer bars today. Let's have a look at them. First up is Aussie CAD. Now, the game changer bars, for those of you who've got no idea what I'm talking about, are simply bars or candles in my case here, who indicate a change of direction, whether that direction be on a daily basis or a weekly basis or even a monthly basis. That's how I look at the charts. And certainly at the beginning of the week, it does give me an indication as to which way the week will end, not necessarily begin. And in this case, it's looking like an Aussie CAD short. Now, I can get with that, to be fair, because we are at the top of, if you like, if I go a little bit tighter, maybe to the daily chart, you can see it probably clearer. We've got a situation where, if I use my pen, where we've got a few equal highs up here, and we've got that sort of scenario. So there's an ascending triangle sitting there, in my humble opinion, or you've even got a box range in here as well. So what I'm indicating here is we are back inside that range. And until that's broken clearly, false break up here, obviously, that you can see from last week, until we are kind of at a juncture or the bottom of the range, top of the range, if you like, and even through it, I can't judge what's going to happen next. I can guess it's going to bounce off here and go that direction. But if I look at the bigger picture and go back to that first bigger picture, which is the weekly chart, there we go. I'm faced with that big key reversal bar, which indicates to me that we're going to have some downside. So it's, in the balance at the moment. So it's a no from me, not because of that indecisive nature of the two different time frames, but because the monthly pivot here is way too close to my entry and gives me a very, very poor reward to risk. So the risk that I'd have to take was 160 pips. The reward that I'd be getting if it got to the monthly pivot would be 25. Very, very poor and way outside the realms of possibly trading that for me. So that, the likelihood is we'll get a bounce off the monthly pivot. Obviously, we don't know how far that's going to be. If we did, maybe a lower high makes sense later in the week, but at this very moment, there's definitely a no for me because of that poor reward to risk down to a very, very strong level. That's going to be very much the theme as we go through it, which is why I'm spending a little bit of time on this. Aussie US dollars, exactly the same scenario. Trading straight into the monthly pivot. I think this has got prospects, however, given the strength of the US dollar and the likelihood of that to continue. But again, the reward to risk is very poor. Better case scenario would be bounce off the monthly pivot, come back to the weekly, give us that lower high, and then we could look to trade it short. Are we really of that mindset? Yeah, look, I think we're entitled to be fair, even given the fact that the Aussie has been on fire against most currency pairs due to the fact that commodity prices are just going nuts. And of course, the Aussie being a commodity currency will follow that. So I can totally see why you'd be thinking Aussie strength, but you've also got to weigh that up against the potential interest rate rises, which are pretty much locked in, one would have thought. With the Fed, and of course the Aussie not yet going and indicating that they're not yet a fait accompli. So a little bit confusing on the Aussie pairs, in particular against the US dollar, I would have thought. I think I'd be prepared to back the Aussie against most other currencies. Maybe the CAD is an exception to that. The dollar and the CAD, I think, would be very difficult to trade the Aussie with, but just about anything else, I reckon I'd be willing to back the Aussie at the moment. Euro Kiwi is the next on our weekly game changer candles, indicating a long, not absolute, because we've got that red body, but you'll note, those of you who follow what I do anyway, I love to see that. That's a beautiful candle, except for its size. And again, the issue of trading straight into a resistance level with that big risk involved, no thanks. Got lovely little tweet. Oh, hello, buddy.
Sorry, but there's a short Short on the FTSE, yeah. If people are interested in it, let's have a quick look at it. Very
Take
quick.
over, mate. I can come back, no problem.
Looks like it's shaped up quite nicely. Oh no, I've not got that on. Here we go. And we should have a decent place to put a stop on this one as well. Oh, where's trading buddies go? Meetings, there we go. So I'm just, here we go. Right, let's open that. Open this. That, clear that, clear that. This. That's right. So you can see here that there is some resistance coming in and a really nice bar here. Now, my suggestion would be to put an order in here at 76.13 and see if it pops back up again to this particular level, and then use this high as the stop, because then you've got a 12 pip stop loss there, and you're taking profit at 1-to-1 by the time it gets the daily pivot. I think there's probably a lot further for this to go. Now, if we sort of look at it in a bit more detail, on the longer term timeframes, you can see here on the 15 that the chart has actually created a little head and shoulders here, and it's been doing this over the last hour or so. It's just been able to pop back up. This is the left shoulder over here. This area here is the left shoulder. Here's the head right now. This looks like it's creating the right shoulder, and it's a good right shoulder because it's on that trend line. You've got a neckline here. Looks like somewhere along this level here. So it looks like it should even get to that neckline. Now, if that does break down, then let's use that as the shoulder line. If that does manage to break down, then there's another stretch down here. Which is going to take us a lot lower. And it's got a decent chance of doing that today, because if we look at this in even more kind of detail with some of the longer term timeframes, again popping up some timeframes, then this may well be the short, which actually does turn this market around. It's a possibility, which actually is the longer term trend to the downside. When we look at this on the hourly. Why am I not getting that on the hourly? Oh, I see why. There we go. When you see this on the hourly, and in fact, not so good on the hourly, but you can see this on the 4 hourly. Trend line along here. And there's a chance that this could come all the way down to that point. Now, this is trying to get the trend line is the best possible entry here, because you got a nice tight stop on that one. And if that was to work out, you're looking at 12 pips in exchange for around about 90. So you're getting close to an 8-to-1 there, right? 8 to 9 to 1 if you can get this entry here. If you don't get that entry, then you can start to look at something else. Obviously, the weekly pivot is going to provide some potential support. So if you've missed this first one, not a big deal, because it's likely to bounce there and maybe give you an entry, possibly at the daily pivot. The daily pivot's not the worst place as well. That's going to be a potential 2-to-1. So there's a few opportunities I would have thought today, but looking on even the even longer term timeframes, then what you see here. And this is where it gets really interesting. What you're starting to look for now is this over here on the weekly back in 2018, and extrapolates here, and it fails. Just about fails at this point here and starts to come down. So we're back basically right along the trend line. This is an intermediate trend line that you got here that might even be a primary, and there's a little primary move here as well. So massive line to get through, massive level to get through. So not an opportunity that comes up that often when you see price right on top of a primary level here. It certainly appears that this bar would give us some sort of indication. Now you might want to wait for the hourly. It's, you know, the good thing about this is that there's longer term timeframes to play as well as shorter term timeframes to play. So you don't have to get in on the 5-minute chart here or the 15-minute chart. You can start to look at this as a longer term play. See if there is even a potential signal, because there is resistance on the monthly. You can see if there's a potential signal after the day is done. There's a gap down already. So this might end up looking like an inside bar. And inside bars do tend to be pretty good indicators of potential reversal at highs and at lows. So that we might even get an inside bar by the end of today, and then you might want to take that tomorrow. But I think that the important aspect here is that we are at major resistance, and if you want to grab a few pips, it may well be, you know, some of the simplest pips that you're going to be able to get, as long as you can get that right price. You know, if you can get the right price, then you'll be in much better shape. The trend line is the right price. The daily pivot is the next right price, maybe after a bounce off the weekly or something. But then after that, you're probably having to shift timeframes to higher timeframes to try and get involved in that. I presume you would quite like to see this as a, you're probably looking for a lower high here, right?
Yeah, I would like to have seen. What are you on a 5-minute chart? I'd like to see a 30-second chart as that that big reversal bar came down. Yeah, it looked like a false break, maybe. Yeah, it gave it to you. It's there. It's perfect. Yeah. If you draw the trend line, from that high on the on that white trend line, where that dot is, and take it through the next lower high. Perfect.
Yeah.
But I don't trade 1-minute charts, so
no. I mean, it's interesting.
It's very seldom that they're not there. If you do see a false break, it's very seldom that there's not a setup on the lower time frame.
Yeah. Certainly looks good anyway, mate, for some downside.
It certainly does. Yeah.
Now, I have been, that's all fine. I've been looking at some wave riders as well, but we'll come back to you, mate, and we'll go through the wave riders of the day and sort of see what people are looking at and whether they're potentially trading some of those. I thought, you know, on Thursday after I was talking, I thought, actually, you know what, it depends who's in the room, and I don't know. It's difficult, isn't it? You got to kind of place the crowd, and I don't know what level the traders are in, and you know, you and I are sort of. I mean, certainly, I'm sort of trading something which is quite nuanced in some respects because of the money management, not necessarily the setup, but the money management is a bit more tricky because of the hedging aspect of it.
Yep.
And at risk of losing people in the room, I just thought, well, actually, maybe we should be discussing things things they've learned, you know, things that they've already learned and they've got kind of locked down. So happy to make some trade calls, and you know, if people are interested in trading the FTSE every now and again, and taking some positions, that's great. But I think we'll also do a little wave rider section on the day and see what we got there. Not discussing the indicators, but certainly discussing the ones that are on the list, and you know, what's the likelihood that they work out.
Cool. By all means, you might teach me something, mate.
Yeah, let's have a look. Let's have a look and see what we got, because there's a couple of things that, you know, I've been doing quite a lot of analysis of the wave rider, and there's a few things that I've started to notice that I think increase the probability of winners. So you know, I've got to discuss some of these things with Paul, because a lot of the stuff that has been produced so far has been done by the robot. So I guess the good thing is that now I'm adding a human element. So the robot's done a lot of the legwork already, and effectively gone, you know, these are the setups that you need to look for. These are the ones that are sort of going to give you trades. And then the human element can come in and go, okay, well, how does this nuance? How does this sort of like, how can we change it so the ones on offer, how do we pick the best, and what are the higher probability ones that we see there? So yeah, let's talk about some of that later as well, mate. But I'll let you finish your piece, or we can get to George, and then later in the hour we can maybe have a look at some of those.
Hi, Paul P. Yeah, I got a chart up there. I'll get to that in a minute. No worries. I'll give you my thoughts. You want to go the reverse way, right? I get it. Interesting with the bots, and Peter has been, trying to grill me into supplying him with, the potential data that he can actually set the robot onto the slingshot as well. It's just impossible. Absolutely,
Yeah, it's tricky, isn't it?
as it would be with yours,
Yeah. Well, absolutely. I mean, I think because we are using price action's harder to program.
And
Indicators are a
trade
bit
lines,
easier.
in
Trade line.
my
I mean,
case.
how do you get anywhere close to sort of
No.
being able to record something which is generated by data on a day-to-day basis, and also it's generated from price. And the thing is, with the indicators, they're also generated from price, but they are set. They are algorithms, if you like. Yours isn't really an algorithm, isn't it? You're eyeballing quite a lot of it.
Well,
And
all of it.
And all of it, yeah.
Apart from pivots, yeah.
It makes it very, very difficult. I'm sure you could probably, well, not I'm sure, but there may well be a way that you could just test a part of it to take away some of the legwork for you.
Got a couple of people doing that at the moment for this new part of the system that we're trying to adapt.
Yeah.
Which makes it, I mean, it's already got a pretty good win-loss ratio, but this should take it actually to the next level when we get that right. So you should be getting into the 90s well and truly lost. I mean, when I say win-loss, and it is a little bit misleading, a break-even is called a win, right? Yeah. And it depends on how you manage that, whether it's a win or whether it's not or not. But generally speaking, we would get an 80%. That's overall time, 80% win-loss ratio. But 4 of those will be break-even, 4 will be winners, and 2 will be losers.
Yeah.
I mean, that's the stats over time. What we're trying to do is get it to 8 or 9 winners for every loser. Now, of course, that's going to reduce your reward, again, substantially, but not everybody wants to hit a home run all the time. So
mate,
if you're happy taking home runners and waiting, that's cool. That's fine. And taking the losses as they come. But if you can also have the mindset of, gee, that's a nice little piggy bank way to go, in that every 10 times I'm trade, I'm going to get 9 that don't lose. Let me put it that way. Yeah, I think that's pretty cool.
I think it's amazing.
Depends who you are.
I mean, well, do you know? I think having that measured sort of aspect to what you're doing is really important, and because I've been talking recently about we talked last week about the fact that that I'd won every trade, sort of the year. Well, I can tell you now that's stopped. 2 or 3 days ago. I haven't taken a loser. I mean, this is the interesting sort of aspect of it. So I haven't yet lost a trade, but I haven't won every day now, because a couple of days ago I just couldn't do anything. There was nothing. There was no way in. And I don't know if you remember, but a few weeks ago I was saying that the market's changed now, and where the first 3 months of this year they were double fit. I was sort of 10%, 11%. I think the first month might have been an 8% actually, but they were still high. So we're talking 30% in the first 3 months. This has slowed right down. I think in this week, the first 10 days, I've got 2%, and I'll be really pleased if I get to the end of this month at 4, because the market has shifted, and I think that we've got to have some level of saying, when the market gives you stuff, take it, but if it doesn't, then don't chase it. And that's what you're saying about, really sort of to your point about these home runs. Home runs are great, and you will get them, I suppose, even maybe with your system, but it's not off and on off. And it was literally, those first 3 months, I haven't seen those for, well, I was going to say a while, but actually since COVID, it's been a little bit like that. We've had, periods that you can make really good percentages. But the majority of time, that's just not the case. You just got to grind it out. I have started to see that this market is becoming a bit more of a grind out sort of scenario for me right now. And you can see it when you look at these charts here, you know, on the daily, these tails, you know, sort of like start to be produced sort of like this area here is really, really good. And these are the first, you know, in fact, that's when March sort of like was going on. But it has slowed here a little bit. Look, this is the first sort of first few months of the year. It really sort of a lot easier to make big gains during that. But during these sorts of periods here, it's just harder. It's just harder. So you just sort of say, look, the market environment has changed. You've got to recognize that and say, I'm going to be happy with what's on offer. And if I can win 9 out of 10 or certainly not lose some of those trades and grind it out, that's fantastic. And I also think that everybody should be pleased with making 1% a month, because you are still hitting out the ballpark every other potential asset class that is out there, even the likes of Bitcoin, all that stuff. You know, if you can make 12% a year, then you're doing great and it's worth trading. If you're not, then you've got to be sort of like saying, okay, well, I've got to improve, because otherwise I may as well just put my money in something and just let it do its thing. So you know, I think we should say let's start at 12%, and if you know from there, then we'll make the jump. But you don't need to be making 100% a year when you start out. You know, it's not realistic every year.
It's highly unlikely that that's going to be.
And it's highly unlikely. Yeah, exactly. So
you might do it once or maybe twice in the first 5 years if you're really lucky. But you know that will come back. Don't worry about that.
Yeah,
for sure.
So so a bit more measured move, but that'd be amazing. I mean, if you can get those 9 out of 10, I think a lot of people would be happy with that. And you know, some of the analysis that I've been doing over the course of of March of the Wave Rider, the Jaguar, from what I've analysed, has performed amazingly well, really well. But I guess, you know, when we go into April, and as I say, this market's changed, and I haven't done the data yet, but when we go into April, I wonder whether we might start to see some of those shorter term timeframe strategies do a lot better. You know, you just, I think with this sort of stuff, that the overarching thing is, you know, if you put the work in, you spot stuff. You just start to see things and sort of go, you know what, I can really take advantage of that. And that's what trading is. It's not opening up your chart and going, right, I've got to make bang this month or this, you know, today or whatever. It's, are you seeing something? Are you sort of like spotting things and improving? And are you able to analyze sentiment that's in the market? Are you able to analyze price better and just drive yourself forward? Because that's really, the money is, as we always say, mate, the money has got to be a byproduct of skill.
Look, there's nothing that beats effort, you know, and the famous old saying that, you know, the harder I work or the harder I practice, the luckier I get, is so true. And you just can't turn that around. It's not there. There's no turnkey situation in any financial market. It's do the work, simple. And I wish, as I keep saying, and I'm 2 years away now, I think we've got an exit strategy for the bamboo. So in 2 years' time, I'll be back doing exactly what you're just talking about, going hard at it and follow. And look, I think we are in a bit of an inflection point as far as market mood, sentiment, tradability is all concerned, because we're now going into a phase of, I'll call it inflation reduction, where all the central banks are going to be doing very, very utmost to curb this inflation thing. The first tool that they're using, of course, is going to be interest rate rises, and we're seeing that across the board. So it's going to be an interesting ride to see who goes how much. I think this week we've got the Kiwi supposed to go 0.25%. We've got the CAD supposed to go 0.5%. And that's going to be an interesting teeter-totter over the week. You're absolutely right, mate.
But then you add another dynamic, which you know, last week Brainard was talking about balance sheet reduction. So yes, we do have We do have a situation where we've got interest rate hikes going on, but balance sheet reduction is massive, because what Brainard's now talking about is potentially $1 trillion coming out of off the balance sheet every year in the United States. So we've got to sort of like add that into the mix. You know, what do these central banks hold as assets, and are they going to now start pushing them back into the market? You know, they won't be going at the same rate as the United States because they don't own as much. But that is still sort of like something that we need to sort of take into account, as well as the interest rate rises. So there are a few hawkish messages and a few hawkish actions coming now from the central banks that change the dynamic between all of them, and that creates opportunity.
Cool. All right, we better have a look at some markets, shall we? I think let's go to George. Marlon, if George is ready, I'll give you about 10 or 15 seconds to get that ready. George is coming to us via recording today because apparently he's got some really, really bad weather. I don't know, cyclone time over there. They get cyclones in Johannesburg?
Oh, I would have thought so. Yeah, would have thought so. They get all sorts, don't they? Great white sharks, cyclones, everything.
Yep, all that. All right, so let's go and see what he's on about today. Come in, George. Let her rip, Marlon.
Seamless that was, mate. Absolutely seamless.
Yeah, look. Oh, 1 sec. Okay.
You need a button. You need a button.
You know, it was one of my greatest nightmares, and I still have nightmares about it. I used to be a panel operator, right? On radio and television. Television was just horrendous because 100% live all the time. So is radio, of course. But I have nightmares. Oh, here he comes. Yeah, play it, mate. I'll tell that story later. You'll have to include the sound.
Hey, trading buddies. Sorry, I'm not
able
to join you today. We're having beautiful weather. See, I'm dressed like an Eskimo here in South Africa, but snow in the mountains. I wish I could get there. Internet connection a bit erratic, so I've decided to do a little video just to talk about the things I really want to start sharing more and more as you go forward. Now, it's about how we trade the open. So very briefly, I want to show you two charts. I wasn't in the market Monday morning first thing. I don't like getting up to trade early on Monday. My mornings are Tuesday, Wednesday, Thursday, and Friday. But here's what happened if you were in the market. Hang Seng 50. Look at the open of the day. Now, that's the first candle of the day. Clearly, gap down. Now, whenever you see a gap down, it is a bear trend. It's a bear trend candle. Then you got to see what happens with the actual candle itself. Opened up here, closed on its low. So essentially a huge bear candle. Now remember, you always, because you're trading the open, it's like trading the news. And whenever you trade the news, as I say, stay out of the actual news announcement itself. They like to come in on the 5-minute chart, at least 3 candles after the news announcement on the 3rd candle. So you got to be observing what's taking place. Follow through candle, inside candle, breakout candle. So this first price action is still a big bear trend pattern closing on near its low. Then we have the follow through candle. Now, this is a beautiful candle. You can jump into here, sell beneath that candle, or sell at the close. But your stop, here's what's very interesting, guys. Your stop always has to be at a technical level, because we trade in the open. We don't put our stop there. Our stop has to be at a measured move somewhere up here. I've taken trades where it just comes back, it doesn't get to the measured move, then accelerates down. So that's where your stop is going to be. Take a trade and then wait. If you don't take that trade, you're waiting for a pullback. You actually don't get a pullback, but you get another opportunity to trade, which is a spike and channel. Whenever you get a spike, you expect a channel to a measured move. So there is a breakout spike. There's a low of it. There's a top of it. You're holding up to get to a measured move down here, so you can sell the close. If you get a pullback, you trade the pullback. Now, this particular pattern is different to what happened on the German 30, DAX 30. Still at a gap down, but look at the fundamental difference between this. There's a gap down, right to the open. So it is, so the market closed here, gap down, bear trend, but the first candle is a bull candle. So you're not going to sell, right? You're going to wait and see what takes place. We're not scalping. I don't like to scalp. We want to take trades where we can make decent returns out of it, just hold on to it without stressing. So the market pulls back quite dramatically, but we're coming back to create a trading range here. So another pattern that you look at, the one we've just seen, is a trend from the open. Another pattern we're looking for is a reversal at resistance or support. So we come back here and it's a clear reversal pattern setting up, inside pattern, outside pattern. That's breakout mode. So you got to wait for the thing to set up. That bear candle is good enough for, say, let's look for its jump to the market short. You don't want to get in beneath a bull candle unless you are prepared to put a wide stop, measured move somewhere all the way up there. So you can do that because the market can still go up there. You can do that and hold on and see how far we go. Or just wait a couple more candles and get confirmation. We do get the confirmation coming up here. So now you can take that trade. And if you take that trade, you can put your stop above here, perfectly acceptable. I always prefer a bit of a measured move. So you can put a stop up there, but you're going to test that low. And when you get to that low, you want to see if you get a measured move down, which is down here, which means we have seen a break below the low of the previous day and acceleration down. We didn't get that. To get a trend reversal, you managed yourself out of the trade. You'd have made perfect good profits. So guys, trading the open is really something close to my heart. So we will take some more time and discuss as we go along. Sorry I couldn't join you. I'm going to enjoy the cold weather and at least you got a crystal clear presentation. Jeff, Ash, take care guys. We'll chat with you next week.
Awesome, George. Thank you, mate. Yes, we will chat with you next week. And of course, if you're tuning into George on a Wednesday, he'll expand on all of that he's just explained to you and more. Wow, he never ceases to amaze me, George. He's just so studious is the word.
Yeah, he's very scientific, isn't he? It's an amazing way
that's a bit of
markets.
Yeah, totally.
Mate, have a look at the FTSE. I think you'll like it. Look at the FTSE on the 15.
Okay. Have I got it here? Oh, not there. FTSE.
UK, yeah, there it is.
$15 minutes.
Yeah. Yeah, so get that trend line in from the top on the 15.
Wow.
Now you've got to be liking that selling under that green bar.
No.
Don't you?
It's too big. Oh, you mean this green bar?
No, the big one.
This green bar?
Yeah.
Oh my God. That's too big, mate.
Too big, is it?
Said the actress of the bishop. Absolutely. What I could do is wait another 3 candles. But that's what I would have to do. So if I entered there, where's my stop going to go? It's got to go there, right?
It's got to go the high, yeah.
So I'd have to enter there probably, underneath the weekly pivot, make it there probably. So I've got 50 pips.
Yeah, that's getting close to 1% move on the FTSE. That's big.
So yeah, I'd have to wait. But if I got a little bit of consolidation here now, then we got back underneath this and retested it, then I'm happy.
Well, this is the price I was saying to people, that this is a good price to get in short now.
Yep.
You know, if you can get in short here, put your stops at the highs, because this hasn't taken out that high, the initial wick. That's a decent trade really, if for risk reward. And because of all the other factors, because of that longer term situation, there's a good chance this is coming down today.
I can't even get there on a 5 minute yet, mate.
No, okay, all right.
I mean, I totally see what you're saying, but
too big a bar.
The risk to reward's too big.
Yeah, fair enough.
But never say never. If I'm patient enough and wait, then it may turn out it may get there.
Yeah,
And
well,
you get a very similar price to what you're talking about anyway.
yeah, you would, yeah, and probably cleaner messaging as well, because maybe a bounce off the daily pivot, back up again, retest a level and fail. Then you got a potential trade. All right, I'll keep my eye on it, mate. If it shapes up by the hour, I'll let you know.
Happy days, good man. Now, I was talking about being a panel operator, wasn't I? And
you were.
Seriously, I still have this nightmare because everything happens in front of you, and you're really supposed to have you've got a log in front of you. In my day, it was all on printed out sheets that were, that thick for the day. And you'd have to tick off everything. You're supposed to go in prepared and line up all your videotapes ready to replay and blah, 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 blah. You've got tape operators. Nothing's automated. It's all press a button, as you said. So it's roll tape. And in those days, it took about 8 seconds for the tape machine to actually stabilize. So you've got to roll 8 seconds prior to everything happening. And because I'm me, I went for a cup of coffee a few times. I actually went to sleep a few times as well. And of course, the countdown keeps rolling. And if you've ever seen it happen, you've probably seen it happen on telly, where you see 8, 7, 6, 5, 4. Well, either the operator's gone to sleep or he's up in the canteen, which is where I used to be, grabbing a cup of coffee. And the general manager standing beside me in the canteen. He said, "How you going? You working today?" I said, "Yeah, mate. Just grabbing a cup of coffee while Coronation Street's on or something, whatever it was." And he said, "That was an interesting last 10 seconds or so." I said, "Oh, why? What happened?" He said, 10, 9, 8. I said, "Oh, shit." So I had to race back to the control room. But yeah, I still have that. And that's happened many times.
Did you get there in time?
No. Of course not.
Of course not.
And I didn't get my coffee either. It was bad. No, it was just ordinary. Never mind. Sometimes SH1D happens. Where was I? I was going to have a look at Dolly N.
Dolly N,
okay. Yeah. I'm having a look at Dolly N for Paul. And, mate, seriously, you've just got to say the skyrockets just got to stop for a minute at some stage. And if this level means anything, 125.75 as I've got it there, and we're fast approaching that, I'd have to say false break potential coming of that level, because they'll test the level. I've got no doubt about that. They're probably testing it at the moment. But I'll call it MO, won't allow me to trade 1, 2, 3, 4, 5, 6 weeks straight up like a skyrocket. It's just like a skyrocket's taken off. Elon Musk must be behind this, right? It has to stop at some stage, because people want to take profit at some stage as well. And maybe they've done so there, but they've climbed back on the wagon. Is it going higher? Most likely. Will it break this level? Most likely. But can I trade it through that level? Answer, no. And for that reason, I would have to say, if you're on board, might be time to start thinking about protecting your position, or maybe scaling out a little bit. Maybe you can pick it up again. That would be what I would do in this particular circumstance, because we're looking at a monthly chart here. And only once in the last, where are we? 22 years, have we surpassed that level there. So to me, that's saying something. Why will it stop apart from people taking profit? Got absolutely no idea, because it looks, for all intents and purposes, as though the Fed is indeed going to raise interest rates multiple times before the end of the year. At least that's what we're led to believe. This chart, to me, doesn't suggest that we're going any higher anytime soon, however. But
could you make the candles a bit bigger, mate?
Sure. What do you see?
Oh no, it's just it was quite difficult to see what you were looking at. That's all.
Oh, okay. Well, all I'm looking at is that level, as I said,
Right.
which is
Yeah.
a 22-year level or something, isn't it?
Yeah. Yeah. And this
Not
is the
quite.
thing, isn't it? That the risk on markets, if you like, have raced towards some specific levels that you would expect to see something, you know, as you say, some profit taken from you know, whoever. We got Easter week as well this week, so it's a shorter week, which makes it difficult, I think, to initiate further longs. I mean, I don't know whether there's going to be maybe less money in the market, which, you know, that lack of liquidity might actually push the market quite viciously either way. But it would be more dangerous, I think, certainly to take a long here anyway.
There's a series of head and shoulders sitting on this chart that have acted absolutely as you would expect them to react. And every time you see that, and you know, this is probably the best thing I can show you on this chart. Every time you see that head and shoulders on this chart, at least, it gives you perfect symmetry. You know, it's absolutely perfect. What's happened over here has happened exactly over, well, when I say exactly, you know, it's not 100% accurate, but by gee, it looks like a mirror image, does it not? Does this one also?
Yeah.
And look where they stop. They stop bang on where they began. So, you know, what I'm trying to say is that the chart is a very technical chart. Believe it or not, it just happens that when it is technical on the time frame that I want to trade it, it's not technical at all. That's the only way I can describe Dolly yen. It just doesn't make sense to me often. But monthly chart, looking back, we're all geniuses. I know that. So what am I seeing? I'm seeing that, and I'm seeing potentially that. Is that going to happen? I can't see it from a fundamental perspective, but there it is, sitting there on the chart in front of me. So I expect this to have, at the very least, a pullback of some kind, maybe to the trend line, maybe to that horizontal level. We'll see. Anyway, that's not what I'm trading. What I am looking for at the moment, I haven't actually updated this, have I? Kiwi CAD. I can't even remember when we got into this trade. It's a couple of weeks ago, I think. Oh, here. When was that? 28th of the 3rd. What's the, yes, 2 weeks ago. And finally, we got a decent candle taking us into profit. We've been in profit 2 or 3 times, but now it's stalled at that exact level again, starting to give me the SH1Ts. And I'm almost of the mind to move my stop to entry. And if it goes beyond there, I want to be out anyway. That's kind of the thought process I've got. But then I see the technical reason that I got into the trade has really not changed. In fact, it's got better because we've had to close below the bottom of that ascending channel. Yes, I see quite clearly a potential inverted head and shoulders here. So it's not a fait accompli. We have come off the top of the bigger range. That's, again, one of the reasons I got into the trade. I'll see how this goes in the next 24 hours. And if we are back above entry, I think I'll be willing to get out. Also, I'll update you on that in the Telegram group, those of you who might be in it. The game changer bars, I think the best of the game changer bars this week are indeed Kiwi CAD, which we're trading, so there's no need to do anything there. Kind of conversely, I think dollar CAD is also a very good prospect. At the bottom of the range, double bottom followed by double bottom. We've already had the first move, I would suspect. That candle there may attract some selling, I would hope. And if it did so and drove it back to the weekly pivot, I think that would be an excellent place to buy US dollar CAD. That said, there is that interest rate announcement coming out of the BOC on Wednesday or Thursday, I can't quite remember which. One would have thought that kind of price action a couple of weeks ago may be pricing in another CAD interest rate rise. Hard to say. It's a fair way out, to be fair. That is nearly a month ago now. So it's really tough to say if the market has considered a 0.5% interest rate increase in the Canadian dollar. Don't know. And that makes it tough. But I'm thinking there might be some selling coming in on the back of that candle there. And as I say, if I saw a rejection bar on the weekly pivot there, I think that would be worth a buy. There were 2 game changer plus bars this week. And one of them was Kiwi Swissy. Do I have a Kiwi Swissy chart? No, I don't. Let's go back to there. I don't think I'm in love with either of these, but I'll have a look at them anyway. What's a game changer plus bar first, I hear you say? Number one, game changer bar has to be the most recent, as in last week's weekly candle or bar, has to be an inside bar on the previous week, which would have been a game changer bar. Game changer bar again being a bar whose high is higher than the previous week and closed on or near its low. That's kind of stretching a little bit because there's a fair tail, but we've then got an inside bar. Again, like I said, with all of the game changer or most of the game changer bars this week, the monthly pivot, in other words, a strong support level, is way too close for me to get any reward out of this. So I can't bank anything before I hit that level, off which I would expect the bounce. Now, where the bounce goes to is anybody's guess. But my penchant against being in drawdown leads me to the point of saying, well, hang on, wait. And if you do get the pullback, pick it up here somewhere. Pick it up off the pivots where you do have room to take some profit before the monthly pivot. And that's exactly what I will do. But I think that one is interesting, as is, I guess, its cousin, which is Kiwi Yen. Different chart, really. But if you wanted to take one, I would say this would be it. Why? Because there is room for profit before the monthly pivot. And if I go a little bit wider on this, you can see how tough it is to go short right now. So you need to have 2 things, in my humble opinion anyway: a reversal pattern, kind of got a little tweezer top sitting there, and then a lower high. So if that's the tweezer top, you're waiting for a lower high in here somewhere. And as yet, that has not appeared. So same thing. Wait till you get the lower high and then look to trade it short. My watch list is almost a replica of last week. Pound Kiwi. We were sweating on Pound Kiwi, we still are, on Pound Kiwi, giving us a buying opportunity. Now, nothing's really changed apart from the fact that we have bounced off this monthly trend line, which is evident, to everybody, I'm sure. It's also a horizontal level running through there. So it's absolutely an inflection point, and we are still looking to buy this. Have to wait, however. That game changer bar there on the weekly suggests that it is going to go. And again, it's not the worst, but by my rules, I don't have an entry. My rules being I've got to have a reversal pattern followed by a higher low, because this would be a reversal of trend. So I can't just pick that up by my strategy. Ash will teach me one day how to do that, but by my strategy, I can't. I've got to wait for the pullback, then look to get into it on a higher low. But if you are of the opinion that this can go, and I would suggest to you that it's, I'll put it this way, the most likely outcome for this currency pair from a technical point of view in the short term is that way. Whether that actually happens or not is another story, but it's the most likely outcome in the short term for this. It may even go into medium term and challenge these highs, don't know. But I'm keen to trade it from that level, and nothing's changed. Still waiting for that pullback. Pound Swiss is exactly the same scenario. Massive base has been formed here. a double bottom on top of a double bottom. We have got the retracement here on the daily chart. What we don't have is a candle that I like to trade. I'll be looking at this though tomorrow morning for sure, seeing what that looks like, and maybe trying to pick it up on a smaller time frame. But the mere fact that we gapped down substantially this morning, and I will therefore be unable to get a candle that looks like something I want to trade. You know, something I want to trade doesn't look like that long anyway. It looks more like can't even find one. Yeah, there's one there. Let me get rid of that. That's what I'd like to trade. That's sitting over here, but because of the gap this morning, it's impossible for that to happen. So I won't be able to trade it from a candle pattern point of view, but I might be able to pick it up on a smaller time frame as a false break of support. So that may look like, it's a bit ugly. It's getting a bit high, but it looks like a sell at the moment. But if we snuck back above here now, monthly pivot's going to be an issue. Might have to take that out first, then come back. Then I can find a way in. But at the moment, it's too tough. And the last one, which was, again, a game changer. Yes, it was. No, it's on my watch list, sorry, is Euro Kiwi. Now, Euro Kiwi is a tough one because from a mental and market sentiment point of view, and potentially a fundamental point of view, because you've got a commodity currency in the Kiwi, which presumably should outpace the euro in this current environment. Yet it's put in this beautiful double bottom sitting here. I've got even nice descending or resistance trend line here as well to work with. So if I got to bounce off here, maybe back to the pivots weekly and daily, high or low, again, that looks very much like a buy to me. The day or 2 day, I could actually play with that because I've got an untested daily pivot standing down here and I'm looking for that retracement. How do I trade that? At the moment, I don't have much to work with, so I'd have to look for a false break, but a false break on a smaller time frame than even the hourly would kind of make sense. So this is what I'll be looking for if I was to stay in front of the charts. I'll be looking for this to find the high, maybe not even find the high, come back underneath that trade line and retest it. And I think there's a trade down to the daily pivot there today. It may have to be played as a break and retest of support, however. So the opposite of that, break this, take out the low here. The gap kind of closed. Maybe it's got to take that out as well. You'd need something in the bank before you hit this area, I believe. So if you got in here, say, you'd have to take profit before that level, if you follow my system anyway. And then your target is the daily pivot. So there's a few potential opportunities there on Euro Kiwi. Let's do Euro Dollar before we go. Again, an untested daily pivot. That always attracts me. I've got a lovely daily trade line coming through here that we're attacking at the moment. Again, on the smaller time frame, the 30-minute, if we got a false break of this level, the gap has closed, so that holds no fear for me. Break here, back underneath after a couple of candles, retest that, bang, down to the daily pivot. That would be the target area. So that's a possibility on Euro Dollar. You know the numbers associated with Euro Dollar and daily pivot tests. They're very, very high. So always have that in the back of your mind. We are almost at DR2. Also have that in the back of your mind. It's very, very unusual for price to get outside of that band. So if it hit there, for instance, that would look even better for a trade back short if we got back underneath that trade line. That's probably the trade of the day if it were to set up. So keep your eye on that. Euro Dollar short off resistance or as a false break of resistance. I think that would be even better. That's kind of where I'm at, mate.
Good stuff, mate. Like it all. Should we have a quick talk of about the wave rider before we go?
Yes, please. Yep. I'll sit back and
Okay.
put my learning cap on.
Put your learning cap on. Okay, well that'd be great. So we want to check out before we do anything else. Thanks for the comment as well, Anne. It is just something that I'm seeing, but it'd be interesting to sort of see what you think at the end of April, whether you're sensing this change in sort of like the way that the trends are shaping up. But before we start any sort of wave ride analysis, I want to just bring in the fundamentals, only because the wave rider currency that seems to be tradable today is the pound. And we've had some numbers from the pound today. And it's this one that I find the most interesting, that the GDP month over month at 0.1%. Now, they were forecasting 0.2%, but I think more importantly, the previous month was 0.8%. So a big reduction in growth over the reading of the month. Is this going to be now the trend? And this is the thing about recession. So if anybody wants to know the definition of recession, it is two
consecutive quarters.
Consecutive quarters of reduction of growth, effectively. So growth contraction. So if you get GDP, so GDP is a really important number. So this is why this is what I'm focusing on right now. 0.1%. It's a tiny bit of growth. Some of these other numbers as well aren't particularly good. In industrial production down -0.6, manufacturing production also down -0.4. So the pound looks like it could be, or the UK economy looks like it could be heading into a little bit of pressure, downward pressure. But we've got lots this week. On Tuesday, we got some CPI numbers from the United States. Actually, earlier today, CPI numbers from China, seeing some further moves to the upside, PPI and CPI. So inflation numbers starting to climb again in China. We've got CPI numbers tomorrow from the United States. So we're going to get another read on how inflation's going over there. The official bank rate from New Zealand and the official bank rate from Canada. So the CAD is another one that is on the Wave Rider watch list today. So we're looking at the pound and the CAD. CPI out of the United Kingdom, which is projected to be near 7%, 6.67% from the United Kingdom. Now, what we need to be considering here is that, yes, inflation may be growing, and Jeff was talking earlier about central banks on this interest rate hike cycle. Well, if GDP is coming out at 0.1%, that puts the pressure to not raise interest rates quite as aggressively, or potentially use other tools to try and curb inflation a bit more gently, rather than just going all out 0.5% raises right across the board. So the Bank of England has got a bit of a headache if these growth numbers continue to perform badly. It's only one data print, but that might be enough to kind of get them on the back foot a little bit. ECB press conference as well out on Thursday, and retail sales from the United States. So we're going to have a look at the consumer, and then obviously Friday we've got the holiday. So quite a lot to pack in for the next 4 days, mate. This could cause a bit of a decision in the market. Now let's have a look at the Wave Rider, and we will also just change this to this. Here we go. Okay, so look, FTSE's coming down. Wouldn't have taken your stop out if you managed to get into the trade on this line here. Wouldn't have taken a stop out so far, as long as you got your spread in place. And it looks like your first take profit is getting pretty close. So may well have a little winner on the FTSE this morning if that's what you guys are trading. Now the pound, the three wave riders that have come up today, in accordance to the scanner, are the CAD yen for a long, the pound, sorry, that's not right. Yeah, sorry, that's right. So this would have been yesterday's bar, so triggering in today. CAD yen for a long, pound Aussie for a short, and the pound Swissy for a short. Oh, I thought that was a pound CAD. Oh, that's a shame. That's a shame. Doesn't matter. Okay, let's have a look at it anyway. Now, the first thing that I notice here is the is the fact that the pound has come up twice in a short. Now, that could be significant. You know, the fact that we're sort of like stacking it up. Now, I've done some a little bit of research on this, and what I noticed was that the higher probability ones are when there's a few that suggest the same direction, and actually 2 looks like the number at the minute. So the fact that we got 2 potential shorts on the pound does flag it up as a weaker, you know, one of the weaker currencies. You may well get your desire here, mate. This
looking that way.
Yeah, looking pretty good. Now let's have a look at the trade. So firstly, the CAD yen. Now there are speculations that you know, Canada will be raising interest rates by 0.5%. Economy's pretty solid. You know, it's in pretty good shape. So fundamentally, this is pretty good. So things line up here. The issue does become that the move really against the yen has been pretty aggressive. But where are those horizontal levels on the yen? And it looks like there's one around about here. So we're getting, if not on top of it, we're getting close to it. So that would, the same as Jeff, I wouldn't be interested in trading this one. I mean, I know there's a signal there, and there might well be a little push to the upside. So, you know, the shorter term time frame traders might well be all right with this. But personally, it's just, I'd want to get in here, you know, before that big move has happened. You know, not so interested when the move has happened, because you're starting to trade into the extension, and we really want to try and sort of trade on the retracement instead. So that one would be out for me. We've got the pound versus the Aussie, and this one's for a short. And I thought I was looking at the pound CAD, and I don't know how I missed that one, but it's a shame, because if it was a pound CAD, it would be much more interesting. Difficult thing here, again, is that not only, look at this bar here last week. Now that suggests that there is there's some bulls down here. This area down here is also, would create this as a problematic area to take any more shorts. And you can see how strong it is down here. You know, look at it. It doesn't really matter. If we're looking at this point, this point, this point, this point, in a way, it doesn't matter where you're sort of assuming that might be. We are in a buy zone. You know, exactly where the price is inevitably going to be a little bit of a difficult task. But we're in a buy zone for the pound Aussie. So again, too big a move to the downside really to be looking for further shorts on anything that's anything but short term. So the pound Aussie's out as well. And then I think Jeff's already analysed the pound Swissy for exactly the same thing. So the pound Swissy, look at this horizontal line. I mean, you showed this point, mate, but look at these as well. You know, all right the way over. Another really strong horizontal level, which would suggest that we would be trading into a bit of danger here. So this would also be out for a trade. Now the pound CAD, I don't know whether there was a. No, there's no setup on the pound CAD. It was the pound Aussie. So really, this would suggest to me that today there's nothing that is available right now. It's giving you the signals, and you guys know what the signals are. So I'm not going to discuss them on social media, but you know what the signals are, and it's giving you the signals, but you've got to check in your rear view mirror whenever you're about to indicate to go right or left. And it's the same with this stuff. This morning, does it? I thought it did, but then can you reload your scanner, Anne, and just see if it's still there? Because I thought I saw it, and now it seems to have disappeared. Oh, no worries, no worries. Okay, have a look when you get back. Have a look when you get back, and just confirm that, because I thought I saw it as well up until about 5 minutes ago, and then I'm looking at it, and it wasn't what I thought it was. If there was a setup with the pound CAD, then I think it would be a lot more interesting than the others. And the reason for that is the pound is on the short list. And the CAD's on the long list because of the CAD yen, and you've got this interest rate potential move about to happen. So this one would be a lot more interesting. But I still think, and also, when I was looking at this earlier, if you look at the horizontal line, it's probably if you look at the support line, it's probably a little bit short, a little bit lower. It's not quite as defined as the pound Aussie and the pound Swiss as well. So I think that there's a chance that this one could go that little bit lower. But I'm just going to double check and make sure. There it is, pound CAD now. Yeah, it would be one, wouldn't it? It would be one. I see it. I do see it. Yeah, there is one there on the pound CAD. I'm not sure why my thing's not picking it up, but I will look into that. But that would be triggered in. I mean, this one would be better. There's no two ways about it. It would be better. I think the problem is, and this has to sort of like come into the broader picture. You are trading the pound and you are trading the CAD. And if you are looking at the pound against the Aussie and the Swissy, we haven't looked against the other currencies, but if you're looking against those two, you can see it's at support. And there are things ahead for the pound this week. And there's obviously a big decision for the Canadian dollar this week as well. So that may well be enough to suggest that we may still be at the end of the run for the pound generally. Never mind it being against the CAD, Aussie or Swissy. It might generally be at the end of a run. And when you see it against multiple currencies on a level of support, that might be just enough to kind of say it could be a little bit more dangerous. Hey, Lewis, how you doing, buddy? So that would be enough for me to say not as easy, not as clean, not as clear that we are going further. We're having further weakness with the pound, and because it might well start to strengthen against a few currencies, it might be a more difficult position to take. So if I was trading the pound CAD, which I probably wouldn't choose to, but if I had to pick one, that would be it. I'd go probably getting some profit quite quickly.
And of course,
yeah.
Trading the pound is not compulsory.
No, man, and I don't think trading today, considering what has been indicated, would be wise. So I would take the option to sit it out today and see if I could get something else a bit later down the line. Protect some money, potentially not make anything, but protect some money. I think that might be the better option today.
Euro dollar on the 30-minute chart. That's the better option.
Yeah, you like that one, and also I think the FTSE. I think the FTSE is also looking good, and where
both sells, yes.
Yeah, for the sell. This does just look like a trade to me. It's right under that level, and now you want it to close here in the next. If it can close it 11:15, so you got another 7 minutes, but 7 minutes and it's not managed to get back above here, then your option would be to try and sell under these points, wouldn't it, with a stop at the high?
Yep.
Yeah, which gives you the weekly pivot as a 1-to-1, and I think that would look pretty good. So yeah, I think I'll be with you on that one as well. But I like the FTSE for a short, which is the overriding thing. I'm just going to turn my plug on.
Yes, Lewis, still patiently waiting. I hope it doesn't take off like a skyrocket and leave us behind. That's the only thing. Yeah, look, that higher low is what we're waiting on, and as yet hasn't presented. But keep your eyes open. I hope it's while I'm awake and in front of the charts. That's all.
Yeah.
Mate,
all right, mate. Yeah, I think we are done. And just maybe one last thing about this pound CAD as well, which I don't like, is when you look at the what's going on here. This bar is a problem. That's not suggesting sort of like, you think about these moves here, really sort of like nothing taking out the closing high at any point here. That's taken out that closing high there. So this bar here is a problem, and that's enough of a red flag. And I think this is the thing about this stuff. Let's use the scanner as an indicator, but then analyze what the chart is telling us by price. Price is king, so we're gonna rely on what price is telling us. And price is saying that the pound is a bit dangerous right now to be trading short.
You have a look at even recent history. The run down to here has been 5 out of 6 weeks or 5 out of 7 weeks has been absolutely hammered.
Yes.
On pound CAD, absolutely hammered.
Yeah.
And then if you have a look at how often that takes place, just go back in time and see how often that's taken place. You won't find too many occurrences of that happening. And then, you start to ask yourself the question, why? Why is that the case? And there'll be a fundamental reason behind that.
Yeah.
But guess what happens when fundamentals meet technicals? They change things. And the technical level is undeniable right now. It really is undeniable. And the other thing is, count the phases that it took to get down there, and then go back and see how many times we've had more than 3 phases of absolute slaughter on pound versus the CAD. Not often.
Yeah, I agree. You know what? I like that. I like that aspect about it as well. That 3 is a really good number. It seems to be the magic number in trading, and I don't particularly like it when you get kind of like more than 3 phases and you're jumping in on the 4th, 5th, or 6th phase, because as you say, it's got a greater propensity to turn around at that point. But 1, 2, 3 is. I mean, you might say that's 1, 2, and 3. But but
also it's staircase and elevator, isn't it? I mean,
yes. I mean, here's a
elevators.
Big one,
Yep. But again, really only 3 phases.
Yeah, and back in 2019, so you're looking at 1 a year. There's another one in 2018. And there's maybe 2 in that year actually. I mean, it does seem to move around a lot. This pound CAD. Certainly, that's what we've seen in the last 3 years. Probably before that, mind you, you had Brexit before that. So you probably want to analyze, what was it like maybe back between 2000 and 2015. But either way, this is a danger signal, really. Be careful now of aiming for this for short side, because that's a pretty strong bar, and it is a takeout of this high. This is really now, you could definitely argue that this is a higher high and a potential higher low from this point here. So this might have already started to turn around. There is an inverted head and shoulders going on here as well. So a few things that would make me a little bit more cautious about trading the pound.
There's some flags there, that's for sure.
Yeah. Okay, mate. Well, let's wrap it there. And thank you to you as always. Thank you to Marlon as well, who I apologise for not thanking sort of every time, because I'm still getting used to Marlon changing from Angel. But thank you to you for looking after us, mate. Thank you, Anne. Yeah, great. I'm really pleased about that, and we'll continue to do it on Thursday. We'll have another look at some wave riders just to help you guys out a little bit. And obviously back with a quiz, I'm presuming, on Thursday, Jeff.
Yes, we've got the return of the quiz. Oh no, that was John was back on Thursday.
John was back, but he hadn't managed to get one done, so we just had a bit of a chat about some trades on Thursday.
Okay. Cool.
Yeah.
Well, I'm sure he'd be raring to go with all brand new information and questions coming up on Thursday. Then, wow, you could take your pick at the moment, couldn't you? What you're going to ask the question about?
Yeah.
There's a whole bunch of stuff going on.
Yeah, there is. It's a moving world.
Yep. Let's get out of here. Thanks, mate.
Yeah.
Thank you all for being our trading buddies. We thoroughly enjoy your company and the input that you bring to our Trading Buddy show. Really appreciate it. Have a great week ahead.